All right, what's going on, guys? It's Luke here. Today, I wanted to make this quick video tonight on how I avoided this loss today. I think a lot of people took this loss, as you can see right here on this 934 candle. A lot of people took this loss, and I'm going to explain to you guys why I avoided this, even though we did look like we were going to dump lower. So I'm going to talk really quick about this specific technique that I use. I was going to drop this in the Discord, but I figured I would just drop it on YouTube. So as you can see right here, this is the 930 candle. Market opens up, puts in a bottom wick, and it pushes to the upside. Okay, from there, what do? We initially get this nice V-shaped recovery right here, right? And a lot of people shorted this candle. Again, this was at 934. We had low resistance liquidity. We had I think we had the SMT at this time. As you can see, ES was reacting off a 30-minute bearish for value gap at this time, and it had failed to take out those highs. You see that NQ had taken out these highs, so we had an SMT. Very nice displacement to the downside, so it kind of looked pretty textbook for shorts. On top of that, we had these relative equal lows. Like, this looks like a really clean short. Now, here's one of the things. Number one, the reason I didn't take this personally was because we had a 2-minute gap. So I personally was waiting for the 2-minute inversion. But besides that, this is the main thing I'm looking at. Obviously, mechanically, this is a great setup. We have an SMT, V-shaped recovery, displacement, 1-minute inversion, low resistance liquidity to the downside. ES also is rejecting off a gap and has draws lower. Like, all of that makes sense. But what do we notice here about this 930? This 930 wick right here, if we hover over this candle right here, this is our 930 wick. Okay, so for me, I use these 930, 931 market open wicks as important draws in liquidity. These are where I like to see price, like as draws. I like to see price reverse off these levels. I use them, and I use them as my break-even points all the time. So for me to see this 930 wick, I see how close we are to this 930 wick. For me to want to get in this trade, I would have wanted the market open wick to be like here or something like that to give me a little bit more range to go break even, because I'm looking at this as my break even. I always like to go break even if I can at these market open wicks, because price loves to give a strong reaction off them. And if you look over here at ES, it's the exact same thing, except ES comes down and takes it out before. So mechanically, this does look like a great setup, but you have to always pay attention sometimes to these 930 wicks as potential break-even points, draws and liquidity, stuff like that. So for me, I'm like, it's too close to the draw. I'm just going to fade this. And on top of that, like I said, I wanted the 2-minute to inverse, not just the 1-minute. But my main idea here was, look at how close we are. If I take this, I'm going to have to go break even right there. And what happens here? Price comes down, sweeps that market open wick, and we get that manipulation back to the upside. After we get the manipulation to the upside, we end up inversing that 2-minute gap right here, and then we end up, obviously dumping lower. But the main reason why I faded this, regardless of that 2-minute gap, was because look at how close we were to this market open wick. And again, I use these market open 930 wicks as important draws and liquidity. I use them as break-even points when I can. And I just use them as areas where we might see a potential reversal. And again, you see it right here. Price comes down. If I was in this trade and I did take this, I would have gone break even right here. Price sweeps it, and boom, it just reverses to the upside. We get that extra manipulation again, and then we deliver. So the main point of this video was to always try to be aware of these 930 market open type wicks, right? Price is always going to be drawn to them. They're very good for draws and liquidity, and they're very good for your break-even points, because you will notice, if you look back a lot, price will tap these, sweep them, and then reverse a lot of the times, or price will be drawn to them. You can use them as good draws and liquidity as well. You almost want to treat them like a data wick. So for me, if I was to take this, I would personally have to go break even right here. So for me, the risk to reward, it doesn't really make sense to go break even after like this, you know what I mean? And to have a safe stop, you'd want to have it at least, up here or something like that. So that's the reason why I faded this, guys. Always be aware of these market open 930, like 931 wicks. They're very important draws. You'll see, if you backtest this, you'll see how much price respects them, sweeps them, all sorts of stuff like that. So just important draws to watch out for. Treat them kind of like a news wick, and just really important points and draws to be aware of. So I just want to knock out this quick video. I just thought that was some of you guys could learn from that. Yeah, just a pretty important thing. I feel like I've been incorporating this a lot. I've been loving using these as my break-even points. A couple trades last week, I used this as my break-even point. And then, if again, for these levels, like, if you use them as your break-even point, you want to see price flush below them. You don't want to see it wick and go because it's, again, a very strong draw. So that's it for me, guys. Just wanted to knock this quick video out because people were asking about this specific trade today. But yeah, that's it for me, guys. We had a winning day. Hopefully tomorrow we got some red folders, so we'll see what happens. But yeah, just a quick one. Hope you guys enjoyed this and learned something and can utilize these. And that's it for me. I'll talk to you guys in the next one. Peace.